Let's bring in Allianz Global Investors Portfolio Manager Burns McKinney and Rosenblatt Securities Managing Director and Partner Gordon Charlop. Good morning to you both. Gordon, I'll start with you. You surprised to see stocks moving down, Dow down 200 right now?
Not really, Morgan. I think that the investment community believes that the rate cut's a foregone conclusion. It's priced in. So perhaps the fact that the jobs report came out the way it did, people are suggesting that possibly it might not happen, so they're maybe trying to walk back their expectations a little bit. But it hasn't been a tumultuous free fall. It's a Friday after a holiday. Volume's down about 20%. We're just sort of listless trading here, but I don't get any sense of this thing sort of gaining any momentum to the downside. Just kind of lackluster trading here. A couple of things, though, that you have to look forward to in the weeks ahead. Obviously, earnings are coming. And the question will be, what is the impact of tariffs and trades on those earnings? And how will they spin it if the earnings come up short? So it'll be very interesting in the next week or two to see how that plays out.
Burns, should a rate cut be priced into the market? Should it be considered a foregone conclusion based on that strong jobs report we got earlier today?
I mean, I think it's very clear the way equities are trading, and it to some degree reaffirms the movement that we've had in recent weeks have been very binary, very risk-on, risk-off, based on interest rate policy and trade policy. And you know, when you consider the fact we had a very strong jobs report, unemployment's near the lowest it's been in 15 years. Stocks are at all-time highs or near all-time highs, and it suggests that maybe we shouldn't expect one in July. That said, we believe that 1 to 2 rate cuts at some point this year, perhaps in September and December, are still likely based on the Fed's desire to reverse any inversion in the yield curve, and the fact that you have imbalances with respect to low rates elsewhere. And what really matters for equity investors is not necessarily what the Fed does, but what they do relative to what is desired or expected by the markets, which suggests, you know, if a kid goes to the fair and they think they're going to get 3 scoops of ice cream and they only get 2 scoops of ice cream, there's probably going to be a little bit of a tantrum. And based on that, we suggest that the stocks aren't terribly cheap. It could be a little bit more volatile at some point later this year. And so one of the things that we're suggesting to our clients is maybe take a little bit of a barbell approach, whereby get a little bit of your offense not through necessarily growthier areas, but through disruptors, things like mobile payments or cloud computing, and try to find cheaper ways to play defense. Maybe not in the bond proxies, but maybe in the defense sector or perhaps healthcare.
That said, Gordon, how important for the bulls was it on Wednesday that we saw the rally broaden out somewhat? We saw all 3 of the major indices close at records. What are the kind of key levels you're watching for whether this can go higher?
Well, you know, to the point that was just made, obviously everybody is keeping an eye on the Fed and this labor market. But the question really becomes, are we just all about entitlement right now? Do we just expect these kinds of things regardless of whether they're needed or they're warranted? Is this what our society has become? And then the other part of it, though, is this Trump's policy in effect? If other countries' central banks are going to support their economies and we're not going to do that, and now he's going to start trying to flood the Fed with people that are going to engage in economic warfare, if you will, and really bring the rates into a level that can spur this economy, is that just the direction we're going to be heading?
Is it economic warfare, or is it really just an increase in diversity in terms of the conversation around the Fed's dual mandate and their policy moving forward?
Well, I think that, President Trump plays for keeps, and I think that, his attitude is that we are losing on multiple fronts. We're losing to China. We're losing on some of these other agreements that we've had, whether it be Mexico or even Canada earlier. Europe, he's had some contention with. Not to upset you there, Wolf, but...
I take that stuff to heart, Gordon.
But, the fact of the matter is, he believes that, and I think that American politicians have borne this out, that the American voter believes that it's all about the economy, and he just wants to try to make our economy as strong as it can be, make America great, put Americans first, and he's going to use the Fed as his bully pulpit to make that happen.